Good afternoon and welcome to our final hearing of the first day of budget hearings. We've survived the first day. It was great. And we're grateful to have Department of Insurance here and Pennie here and have Commissioner here with the whole team. We appreciate your flexibility with being with us this afternoon. Before we begin, Chairman Struzzi, any introductory comments?
Yes, thank you, Chairman Harris. Good afternoon, everyone. Appreciate you being here and for being flexible. Just an opening remark, if you will. I think it's important to note, unlike most agencies who are testifying during budget hearings this week, the funding for the Pennsylvania Insurance Department is separate from the general fund. The agency is funded through the collection of fees from insurance providers deposited into the Insurance Regulation and Oversight Fund. However, PID does have an impact on Pennsylvania's overall fiscal health because of its oversight of large insurance marketplaces in Pennsylvania, from auto to healthcare and beyond. Last year at this hearing, we discussed the role that we at the state level can play in keeping costs low, and I expect we'll do the same today. I want to emphasize from the outset there are a lot of reforms that House Republicans would like to see when it comes to health insurance cost, but we also recognize that it can be complex to separate which aspects can be managed at the state level and what is in the purview of the federal government. I look forward to hearing from you and how we can work together to lower cost for Pennsylvania. Thank you.
Thank you, gentlemen. Commissioner, if you and your staff could please stand so we can swear you in. Do you solemnly swear that the testimony you're about to give is the truth, the whole truth, so help you God? Thank you so much. You may be seated. Commissioner, do you or the executive director have any introductory comments or you want to jump right into?
Yes, sir. Good afternoon, Chairman Harris, Chair Struzzi, and members of the committee. I am Mike Humphreys. I serve as Commissioner of Pennsylvania's Insurance Department. With me today are the department's Chief of Staff, Jody France, Budget Director, Anu Upadhyay, and behind me are Deputy Commissioner Dave Buno and Raina Workman, PID's Deputy Ledge Director. We always appreciate the opportunity to discuss who PID is, what we do, and how we help Pennsylvanians. As you may recall, and the chairman just highlighted, PID is not funded through the general fund. Each year, through our licensing fees and other revenue-generating activities, PID not only generates enough money to support its own operations, we also provide funding to the general fund to support other Commonwealth initiatives. In the past 3 years, our IROF budget has hovered around $40 million, while we have provided over $60 million each year to the general fund. I'm proud to report that under Governor Shapiro's leadership, PID has taken steps to more efficiently and effectively carry out its duties. These efficiencies include efforts to reduce paper, like implementing a paperless process to annual statement filings, providing templates that facilitate company compliance, and eliminating unnecessary fees and hurdles to get a producer license. In addition to implementing these efficiencies, I'd like to highlight a few of our recent accomplishments. During 2025, the Bureau of Consumer Services engaged with approximately 54,000 consumers, handling more than 14,000 complaints and recovering more than $13 million for Pennsylvania consumers. PID helped over 7,000 Pennsylvanians obtain almost $140 million in life insurance proceeds after the death of a loved one. Our producer licensing division received over 80,000 individual licensee applications and processed them in an average time of less than 3 days. And our rates and forms filing team received about 12,000 to 13,000 filings, saving consumers over $277 million in premium by blocking unjustified rate increase requests. And through PID's Bureau of Public Engagement, I neglected to introduce Bethany Blessing, who's our Director of Public Engagement. We have made great strides in getting the word out about who is and how we can help, who PID is. And we're not going to stop. We'll continue our efforts to educate about insurance and hope that we can reach as many of your constituents as possible. Under Governor Shapiro's leadership, we will continue to build strong relationships with stakeholders in the General Assembly while we continue our efforts to more effectively and efficiently perform our core regulatory responsibilities. Again, thank you for the opportunity to be here today. I look forward to working with all of you and to your questions.
Good afternoon. I'm Devin Trolley, the Executive Director of PENNIE, Pennsylvania's official health insurance marketplace. I appreciate this opportunity to share updates on PENNIE and the status of coverage here in Pennsylvania after we've just come out of our recent open enrollment period. Last year, PENNIE reached record levels of enrollment, due in large part to coverage that was more affordable than ever. However, this year, PENNIE enrollees face unprecedented cost increases. Their health plan costs doubled because Congress did not extend the enhanced premium tax credits, which for years helped lower costs and increase enrollment. The impact of higher costs was seen immediately. With only some premium tax credits remaining, PENNIE saw 104,000 Pennsylvanians make the difficult decision to end their coverage, with 20,000 dropping in February alone. The numbers grow larger every day. Working Pennsylvanians across the Commonwealth shared what having coverage means to them in terms of both their health and financial well-being. We hear it from the farmers who feed us, the local store owners we buy from, the barbers and salon owners who cut our hair, from our family, our friends, and our neighbors. But now more of our fellow Pennsylvanians are going without the peace of mind and protection of having coverage. Having more uninsured in Pennsylvania, as we have now, is a lose-lose for everyone. People don't stop getting sick just because they don't have coverage. It weakens our healthcare system, especially in rural areas, when care that had been fully reimbursed is now uncompensated care. Our economy is weakened when people are too sick to work or small business viability is threatened. While the federal government saves money now, the long-term costs of the uninsured beg the question of whether we're not all ultimately paying more. Pennsylvania could mitigate some of these impacts. Act 54 of 2024 created a state affordability program to lower health plan costs through PENNIE. This program is not currently funded, but funding it now could allow tens of thousands of Pennsylvanians to gain coverage, improving the outlook for households, local economies, and the healthcare system overall. I look forward to sharing the data and stories of PENNIE enrollees with you today, and thank you for the opportunity.
Thank you both. We'll start with Representative Mays.
Thank you, Chair, and happy Black History Month. Commissioner, welcome. Thank you for being here today. As was just mentioned, the catastrophic situation we are facing in this Commonwealth and in our nation due to the failure to pass the enhanced premium tax credits, many Pennsylvanians are going to suffer. We know that they'll be on the short end of trying to find coverage that may not meet their needs, but that they will not be able to afford. So how is the insurance department working to protect consumers from excessive or discriminatory rate hikers who are looking to take advantage of this moment? And then the second part of the question is to thank you for your participation in the work of the Pennsylvania Black Maternal Health Caucus. Related to my first question is, you did a survey about what are the essential coverages that are needed for women in this Commonwealth. And if you have results of the survey, we'd love to hear some highlights or where you are with the status of the survey. So what's going on with folks who are going to face discriminatory rates, which I would imagine will be the moms of this Commonwealth as well, and what are the results of the survey that you all instituted over the past year?
Appreciate that, Representative. And I think Devin highlighted some of the significant premium impact that people, when they came to PENNIE, saw for this year. An average of over 100% once you take away the enhanced premium tax credits that Congress still to this day has an opportunity to extend to make coverage immediately more affordable. What PID's role is, throughout last year, around May of each year is when companies will submit their product filings for the following year. So once those rates come in, May 15th, my team goes back and forth with their company actuaries to make sure that we agree that the assumptions for the cost of coverage to deliver those benefits are in line with the expectations for what the premium and what the charge is going to be. So we push back as much as we can through that process to make sure that the rates aren't any higher than what we think is justified by the potential claims payouts for the following year. As We actually approved for 2026 premiums that were around 21.5%, but obviously that was compounded by the federal government's inaction when people actually came to shop for coverage. I think on your second question, Representative, thank you very much for inviting me to participate in those conversations. That event was great, and I look forward to future collaborations with you. We have two moving paths when it comes to women's health, maternity health. The first one is part of our form filing process. Last year, we looked at several key benefit offerings and really wanted to get an understanding of what's in the market. And at the end of December, I think it was at the end of December, published information on what we found so people shopping for their coverage could understand that now, because of the Shapiro administration's encouragement, all companies will cover zuranolone, the fast-acting oral treatment for postpartum depression, beginning in 2026. All will be covering PPD screenings and care for the post-year and pelvic floor therapy. Where I think there's a lot more work that can still be done, doula coverage, I think we have about one. Surrogacy coverage, there are a couple companies. Breast milk storage is getting better, we're up at 5. Donated milk, that's up at 3. And so that was for last year. Those results are now public. We'll be looking to see what companies are projecting out for 2027 when those rates and forms come in May of this year. And I think now that the companies know kind of from a benchmark perspective what we're looking at, we'll look to see coverage improvements, I think, for 2027.
Thank you. Thank you, Commissioner. The doula coverage is essential, and it was one of the major pieces of legislation our caucus was able to pass into law. Thank you for your continued support, and we look forward to working with you too. And just quickly for Executive Director Trolley, I wanted to ask you, I work to enroll people in the Affordable Care Act. I know how important PENNIE is to my district and the Commonwealth. One of the essential health care benefits is maternity and newborn care. How are you seeing any demographic information about who's going off? You mentioned 20,000 in February are exiting PENNIE or not able to afford it. Are you seeing any particular demographics around moms dropping off of PENNIE or women across this Commonwealth?
Yeah, it's a great question. We have not looked specifically at that for terminations. What I can say is that a lot of terminations have been older individuals, so who are not yet eligible for Medicare, and are young adults who are some of the first to drop coverage when costs go up because they don't think they need it. And the impact of that is that it hurts the risk pool and causes costs to go up for everyone. But we haven't looked at that specific question, and we can get back to you on that one.
Yeah, we definitely love to work with you on that. Thank you again, Chair Harris. Thank you, Commissioner. Thank you, Executive Director Trolley.
Thank the gentlelady, Representative Alsumer.
Thank you, Chairman Harris. Commissioner Humphreys and everybody else, thank you very much for being here. My first question, and I have two, is regarding the public adjusters. The House recently unanimously passed this bill reforming the Public Adjuster Licensing Act. I appreciate the department being involved in this process, along with my colleagues in the House. Can you please explain the importance of this legislation from the department's perspective?
We thought it was critically important and really appreciate you engaging the issue and helping drive this issue forward. It's one that after kind of a significant claims-causing event, it's one that we run into quite frequently from Dave's consumer side, where there's instances that a certain claim maybe hasn't been closed because there's a disagreement between the company and the policyholder. Often we find that a public adjuster is part of that conversation. So what we really sought out to do, because a second piece that really has been challenging when Dave's team has gone out there is to find just exorbitant fees that were charged. So, I mean, fees as high as almost 40%. So if I'm getting $100,000 back to repair my house, 37% of that, so $37,000 maybe is going to the public adjuster who helped negotiate that claim on my behalf, leaving me in a position where I can't fully repair my house. So in the bill, we sought out and worked on putting a cap, a reasonable cap on what public adjusters could charge as part of that process. We also sought to prohibit a public adjuster from both being the public adjuster and the remediation entity as part of the same claim. Now, you could still own two different businesses, but because of the inherent conflict of interest, you can't work on that same claim with two different hats. So really, those are two of the key points that we wanted to drive through last year, and really appreciate all members of the House for advancing that with such a significant vote.
We sincerely appreciate your input as well. My next question quickly revolves around PENNIE and the navigators and the assisters licensing. As a licensed insurance agent in the state of Pennsylvania, licensed insurance agents in Pennsylvania must complete pre-licensing education, pass state exams, carry errors and omissions coverage, and meet continuing education requirements. PENNIE certified navigators and assisters provide plan guidance to customers, but are not required to hold insurance producer licenses. Can you explain why the Commonwealth believes this is a different regulatory standard, why this different regulatory standard is sufficient, and how it protects consumers? And what safeguards are in place to ensure parity and accountability?
So I'm happy to speak to that from how PENNIE really uses both brokers and assisters to help people get coverage, but there are some key differences. So brokers, as you mentioned, because of their higher licensure and training, they can do the whole gamut of consumer support. They can help them apply for coverage, get tax credits, and help get them choose a plan, including all the different components of that, and help make recommendations. A clear differentiation between that and assisters is that assisters are not able to make plan recommendations. They really thrive more, and then we really see them helpful with people who are mixed coverage with Medicaid and PENNIE across a family, and they really focus, we see a lot more on complex eligibility cases and completing the application. So there are very distinct roles. We train on those roles very clearly every year as part of our annual training of what the limitations of being a navigator and an assister are versus a broker. And I'll just note, we have 54% of our enrollments are assisted by a broker. So the broker activity is extremely supportive and strong in PENNIE enrollments. And our assisters play a key role. They tend to be very supportive, again, of families who have complex eligibility, especially when they're mixed coverage between Medicaid and PENNIE.
Do you know how many assisters and navigators there are in PENNIE?
Yep, there are about, I want to say a little bit under 1,000.
I'm sorry, could you repeat that?
Under 1,000.
Okay.
And there are more than 5,000 brokers.
Okay. Well, I thank you very much. I appreciate your time this afternoon.
Thank the gentleman. Representative Fleming.
Thank you, Mr. Chairman. Good afternoon, Executive Director Trolley, Commissioner Humphreys. Really appreciate you being here. I was very lucky growing up as a kid. Most of my life was spent without health insurance coverage. As far as I can remember, I never got any major illness. I just had to get stitches a few times, which did not end up in severe medical debt for my parents or anything like that. But that's, you know, healthcare costs since I was a kid have skyrocketed. And in my district, there are 59% of children in my district that are on some sort of public health insurance, which either medical assistance or on CHIP. That's a big number. And I got that number from Pennsylvania Partnerships for Children, who just released their fact sheet back in February, or a little earlier this month. Can we talk about the downstream effects of how the healthcare system interacts with people who are not insured, and why it's important, to the extent possible, for government, if it has to, or other entities to make health insurance affordable, not only for children, but for adults as well. People need to get care. People who require care are going to get it. So how does that work in terms of payment and in terms of the dollars and cents within our healthcare system?
Sure, Representative, you make a great point. I mean, people don't stop getting sick because they don't have health insurance. They don't stop getting injured because they don't have health insurance. And where you see kind of the, I think, global environmental impact is at the provider level. Providers are still going to be providing these services, and instead they'll be chasing bills. So you'll see medical debt grow. You'll see cash on hand at providers in hospitals, many of whom are already struggling, having to chase and collect financial resources from people that don't necessarily have it available. And that's for those that are uninsured, and it even negatively impacts those that remain insured. Just for 2026, I mentioned the 20+% rate increase. 3.5% to 4% of that was the expectation for a worse risk pool because, as Devin mentioned, young and healthy individuals leave the market. Those that think they can forego insurance are generally the first that pull out of having insurance coverage. So the remaining pool tends to be less healthy than those that were in the pool prior. So when a company is pricing its product for the following year, it has to assume that it'll pay more claims or at a higher rate than it would have otherwise paid. So it impacts really the entirety of the healthcare ecosystem, from the providers to those that remain in the insurance space, in a significantly negative way.
And if I can just add, one study looked at the number of people dropping coverage from the cost increases, and they calculated that for Pennsylvania alone, because of the weakening of the healthcare system and the weakening of small business owners and other job creators here in Pennsylvania, that would cause the Pennsylvania GDP to go down by $715 million. It would cause a loss of 5,100 jobs in Pennsylvania, and it would mean $49 million in lost state revenue.
Thank you for that. And at the end of the day, and I know it doesn't make up for the total cost, but taxpayers are still on the hook for some of these costs for those who are uninsured and seek care, right? There's a funding stream for uncompensated care to hospitals and health systems and other healthcare providers. So it seems to me that if we as taxpayers are going to make an investment, making the investment up front to ensure that people do have health insurance and there's a payer for when they go to the healthcare provider, it seems to me that would be a lot more wise in terms of spending than trying to pay for it on the back end with uncompensated care. And then if we can't do that, watching our health systems and providers close and shutter their doors. So I don't know if you want to respond to that, but if not, that's okay.
I think we agree with you wholeheartedly. Had Congress extended those tax subsidies, I think you would have seen record enrollment through PENNIE.
Yeah, as an example, New Mexico was able to fully backfill the enhanced tax credits, and they saw a 14% enrollment increase. For context, if Pennsylvania saw a 14% enrollment increase, we'd be at 565,000 insured, but now we are about nearly 100,000 lower than that number of where we could have been.
Well, it's certainly something to work toward. Thank you so much. Thank you, Mr. Chairman.
Thank the gentleman, Representative Krupa.
Thank you, Mr. Chair, and thank you to all the testifiers for being here today. It's no secret that we're in a mental health crisis here in Pennsylvania. There's rising rates of anxiety, depression, and suicide, yet more providers are leaving networks, and it's creating a real access to care issue. So the governor's budget narrative raised concerns about the financial impact a policyholder faces when their mental health provider is no longer in an insurance network. It seems the department is looking to create a more efficient process for the providers to enter into insurance networks. So my question, I've got multiple questions about this, but I'll try to limit it. Can you provide more details about the legislation that's being proposed? Is there a trend that mental health providers are dropping out of insurance networks because of reimbursement rates? If so, how would this policy incentivize them to join a network? And ultimately, then, how does this all boil down to the consumer who's just trying to maintain quality care?
Yeah, I think at its base, it should expand the availability of those mental health professionals to the consumer looking to seek service. So it's, in effect, any willing behavioral health practitioner draft legislation that would provide that any provider that wants to and is willing to join a network at the terms that are suggested by the insurance company cannot deny them from joining that network and must provide reimbursement to those providers at comparable levels to what it would otherwise pay other providers, so that we really put an end to what we hear today is our network is full, meaning we already have reached a quote-unquote adequate network. We don't have to accept any additional providers. We're not going to accept additional providers. That's not going to be a thing of the future if we pass this any willing behavioral health provider legislation.
Okay. And the proposed policy, my understanding is it only covers mental health providers. Are you seeing trends for other health providers with respect to network access?
We have a pretty robust network adequacy review process where each year, as part of that rate and form filing process, we also get their networks. We run them through a system. This year, we actually went from, instead of as the crow flies for distance, we measured actual turn-by-turn directions. So that tightened it up a little bit more than where it was in the past in terms of how many providers need to be accessible based on where my place of residence or employment is. So in areas where we find that companies can be broader in their network, in the past we have provided additional lists of licensed providers that they could add. We've had companies in the past, because of the list that we've provided to them, expand their network substantially because now they had an accessible list for providers that they could go out and outreach to. For those that don't meet kind of what our quality metrics tie at around 90% is what we would like to see in terms of 90% of that service area has sufficient access to this provider type. We will follow up with them and request additional reporting on how they are going to fill the gaps that we have. Now, there's some places that a gap can't be filled, right? There just aren't the number of providers in a certain area to fill out that network. But in those cases where there is a willing provider that's acceptable within a reasonable amount of time, they're expected to be treating that provider as an in-network provider. So a consumer doesn't get penalized on its cost share from the deductible level and others just because there isn't a provider in that area that's in their network.
Thank you very much. Thank you, Mr.
Thank the gentlelady, Representative Kincaid.
Thank you, Mr. Chairman. Thank you guys for being here today. The governor's budget calls for legislation that would ensure that direct payments for prescription medications count towards a Pennsylvanian's out-of-pocket maximum, specifically noting that folks who shop for more affordable medications can be penalized when insurance companies ignore what has already been paid on their behalf. I'm wondering, can you explain the problem that the administration is trying to solve with that?
Sure. We're actually, I mean, I think everyone in this room knows that there's a challenge in transparency in healthcare, right? It's hard to know, unlike when you're going to the convenience store or a retail store and you can look at the prices that what you may purchase are going to cost you. That's not really a thing as much on the healthcare side. So the proposed legislation would look at situations where an individual has found prescribed medication at a cost that's lower for that insured individual. It may not be at a network pharmacy. It may be at one of these direct-to-consumer sites that you see now coming up. But when that individual pays that $12 for a generic that otherwise maybe could have cost $70, that $12 is actually counted towards the accumulator programs within the insurer. So they have to count what somebody is actually spending on the drug within certain limits, and we're working on getting that legislation out and being able to socialize it with all of you. But it really seeks to benefit those individuals that are looking to shop for care, looking to shop for prescription medication that they can afford. We don't think those individuals should be penalized. And that's what the governor is saying in proposing that legislation, to make sure that those costs that they're paying get counted to their benefit in the insurance policy.
Thank you. And similarly, I've introduced bipartisan legislation that sort of addition to that. So would you agree that when a patient pays for their medication, whether on their own or via an assistance program or the direct consumer, that the payment should count towards their out-of-pocket maximum so that insurance companies are not effectively receiving twice as much as they are entitled to on the backs of our sickest and lowest income Pennsylvanians?
That's what this bill would do. It's the cash pay or credit pay. It's the payment that the consumer is making out of pocket for the drug would count towards that benefit. Now, it's not necessarily an accumulator bill in the sense of there's some, I think, legal uncertainty right now in how the federal government has determined what companies need to count towards accumulator programs. The notice of benefit and payment parameters, SSIO has gone back and forth on what is required to be counted, what doesn't have to be counted. So it doesn't go that next step, but it does go so far as to say those costs that a consumer are actually paying need to count towards their benefit.
Thank you. And we passed legislation last session to rein in pharmacy benefit managers. And I'm wondering if you can speak to how the enforcement of that is going.
Sure, it's really just beginning. Because of the timeline of the legislation, that the benefits came into play in large part 1/1 of this year to apply to policies that were written this year in the individual and small group market. There may have been some large group plans that came into effect before this time, but we actually have a number of projects going right now. The first is going to be the study that's required under the legislation. We were required to look into spread pricing among PBMs and what an impact a $10 and I think 50 cents dispensing fee would have on kind of the overall market dynamics. So we had contracted with a national consulting firm to do that study. We expect to get it to you in the spring of this year. So hopefully within the next month, six weeks, 8 weeks, to reveal that study. At the same time, we have reports that are now coming due under the legislation. So in April, PBMs will have to be submitting to us their first ever network adequacy reports, how their networks are adequate and what they're doing in that space. In July, that's where the transparency reports come in, how much they're paying affiliated pharmacies, non-affiliated pharmacies, and others. So we're moving those pieces, as well as Dave and our team is coordinating with primarily independent pharmacies on a more streamlined pharmacy complaint form that will address really any of the benefits that consumers are entitled to receive under the legislation in a single form. So it could be related to the designation of a specialty drug, but it could be clawback provisions, it could be charge provisions. So we are actually actively working with them as I speak on how to make that form as positive as we can for the end users of it. So as soon as we're able to kind of work through that, we'll have that on our website for an easier way to get complaints to come in. So far we've gotten just shy of 80 complaints. I think in large part because of the staggered implementation date, a lot of those haven't been related to in effect policies. A lot more of them are really specifically related to GLP-1 drugs, and it's my insurance company doesn't cover it solely for weight loss purposes, and that's generally true. Insurance companies will cover it when there's a comorbidity, but not for weight loss purposes solely. So complaints that we've seen outside of what would otherwise be covered by Act 78, but one that we're getting on PBMs.
Thank you. Thank you, Mr. Chairman.
Thank the gentlelady, Representative Nelson.
Thank you, Mr. Chair. Commissioner, great to have you here. I want to ask and talk a little bit about some consumer protection issues related to insurance. You know, we recently had a senior driving seminar, and a family that was there was talking about a very difficult situation they were going through related to their homeowner's insurance because apparently their roof was identified through an AI data review that it was now getting older and they had X a number of days in order to put a new roof on, or else their insurance would be canceled. You know, so for an older couple who said their roof was in a really good condition, they felt they had no ability to push back against this process. And in looking into it, I guess it is a thing. It's AI targeted risk profiling of homeowners. And can you touch a little bit about your, the department's, interaction with this? I think you've done a great job at helping maybe to prevent auto insurance increases in going up, but it seems like this new AI, computer vision, satellite imagery, building history and analytics, and then, homeowner after homeowner are being really receiving increased premiums. What are we doing about this?
Yeah, appreciate the question. And I would add homeowners into the department is doing a really strong job at pushing back. We've actually saved policyholders $70 million over the last 3 years and just pushing back on rate asks. Now, aside from that, though, we are seeing some of those same challenges that you describe. And I think it was last year at this point, we did issue guidance on the use of aerial surveillance because we were hearing that companies were using it to cancel or non-renew policies. And basically, we went through and reminded companies of their responsibility to make that information known to the policyholder, give them an opportunity to correct the change, and work with the policyholder where possible. Now, I think some of what you're seeing, though, is newer developments that we continue to want to have further conversation about because we're seeing, I think, trends not only from a certain number of years where companies are now automatically assuming you need a new roof.
Yes, it seemed like, and again, I'm not a black belt in this area, but both listening to the family and then asking some questions that even though a person may buy a 30-year or pay for a 40-year roof, that now they're starting to at that 5 to 11 years is considered middle-aged in the eyes of the insurance company, and they're starting to increase those percentages. Legislatively, do we need to put together a bipartisan package to, create a way for homeowners who've been identified through an AI review, like they didn't seem to have a voice even to be able to dispute the assessment. They could or the insurance company was saying, well, you could exclude coverage, or we're going to increase your deductible, or you're going to get an as-is roof. So people are already paying more, and it seems like this may be a way to buffer additional profits for some of our largest insurance carriers.
Yeah, we'd be glad to talk to you more about how we can strengthen the consumer protection side of that conversation, because I think one point that we'd also want to look at as part of that process is not only the potential replacement of roofs, but the coverage may change. So maybe they will continue to underwrite you, continue to offer you that homeowner's coverage, but it would turn into a situation where it's actual cash value instead of a replacement value policy that gives you the full replacement for that roof should you have a claim in the future. So I think as your offices run into these issues for now, it would help us to be able to kind of develop a complaint ledger on these issues. So please feel free to reach out to my team and Dave and others so we can look at this on a one-off basis while we have conversations about what a improved, I think, homeowners policy could look like going forward in terms of the benefits that are required to be at least made available, if not offered to consumers, particularly related to roofing. But we would be very interested in seeing kind of those specific AI complaints looking at roof age without looking at roof quality or sending somebody out to verify that the quality of the roof isn't what they say it is based on AI.
That's great. I'm fortunate to serve on the insurance committee, so I will be following up. Thank you very much.
Thank you.
Thank the gentleman, Representative Salisbury.
Thank you, Chairman. I stood at this same table in 2024 and asked a question about how the Department of Insurance classifies autism. And I was told that autism is a mental illness, and that is how the state of Pennsylvania has it classified. as the only openly autistic person who's ever chaired the state's Autism Caucus, I have been very concerned about governmental disinformation that comes out about what is not a mental illness but is a developmental disability or neurodevelopmental disorder. So in the wake of, for example, RFK Jr.'s announcement related to autism and Tylenol last year, and last month saw him entirely restructure the Interagency Autism Coordinating Committee to include people who believe that vaccines cause autism. I'm curious if you have changed in any way the manner in which you present autism to the people of Pennsylvania, and whether this disinformation campaign at the federal level has influenced the way that you speak about this neurodevelopmental disorder.
Yeah, I think the misinformation campaign is a significant challenge to all of us across, not only in the autism space and the vaccine space and otherwise, as you mentioned. For us, we've been talking about it in a perspective of requiring parity and more robust coverage for diagnoses of autism and for related services for those that are insured. So it's less of a classification question and more of a requiring the most robust benefits possible. It wasn't us so much that put it in a mental health bucket as the DSM and other guidance that came out to put it in that bucket. So we've talked about it less from a lens of where you would classify it and more from the lens of the benefits applicable to autism and to patients impacted by autism.
I understand that, and I definitely want everyone to get all the services to which they may be entitled. I was not diagnosed until I was an adult in 2012. I was diagnosed with what was then called Asperger's, which is now reframed as level 1 autism. But I remain concerned about the way in which we use terminology in Pennsylvania and how it may impact the health outcomes of autistic children and adults. Because, for example, we do know that some people, when they believe that their child has an illness called autism, they will do horrific things like feed their children bleach or antiparasitics. So I'm just curious in what way you may be trying to combat some of these unfortunate misunderstandings and outcomes.
Yeah, certainly we would combat any suggestion that bleach is a good medical alternative.
Someone on my Facebook page did encourage it. She said it was a great idea.
Oh,
I did block her, but yes.
But the way that we try to reference it, it cites to the DSM. So it's not so much that we're going out there and saying it's a mental health condition. It's just classified within the DSM that really guides mental health parity regulation as falling within coverage of mental health benefits. So it's really the focus on the benefits that are required to be provided for individuals with coverage.
As I said, I certainly want to make sure that everyone is getting the coverage and services that they're entitled to, but under the DSM-5, it does classify it as a neurodevelopmental disorder. Likewise, the NIH, the National Institute of Mental Health, the CDC, the WHO, all classify it as not a psychiatric condition, but rather a developmental disability. And I just want to make sure that as we set policy, and part of that policy is insurance benefits, that we are not inadvertently contributing to any disinformation. So I would appreciate anything that you could do going forward to try to clarify what autism is, what it is not, in your capacity with working with insurance benefits.
I appreciate that, Representative.
Thank the gentlelady, Representative Brown.
Thank you, and thank you all for being here. I'd like to follow up on a question that the good lady from Allegheny had asked about PBMs. Act 77 of 2024, the Pennsylvania's Pharmacy Benefit Reform Act, introduced greater oversight of pharmacy benefit managers and their role in drug pricing and reimbursement. And a key provision of the law establishes a process for pharmacies to challenge the department's designation of a drug as a specialty drug. I have a small hometown pharmacy in my district. In fact, they're called Hometown Pharmacy. And the governor visited them last August and had expressed, his concern and empathy for what they were going through. And I have had an opportunity to follow up with these folks since the law came into place. And they've assured me that pharmacies are still losing a significant amount of money dispensing through managed care MCOs, namely Express Scripts, CVS, and Caremark. Generic maximum allowable cost lists are unsustainable, and they're paying penny margins to these small businesses. The PBM spread pricing still exists. Variable contract rate pricing is in effect, where contract reimbursement rates constantly change. There are countless examples of where patients have unmet deductibles. The pharmacies get temporarily reimbursed higher to push their deductible, but then once the deductible phase is met, the bottom drops out and the reimbursements are much smaller. So I'm very concerned about businesses like this that are trying to exist in my community, and I would just question, have we begun checking or challenging some of these processes?
Yeah, Representative, that's really where we are now, because a lot of those provisions didn't start until January of this year. So I think Hometown Pharmacy is one that is part of the group of independent pharmacies that we're talking to actively on kind of updating the complaint form to make it work for them. So they have an easier way to come through to us. But starting this year is when all the reporting comes into us, so we will actually be able to see what the spread looks like, what additional transparency is accessible to us in their different contracts. And that's July of this year is when the transparency reports come in, and then will be made, a version of them will be made public for everyone to consume.
But when do we start taking action? Because to a small business like Hometown, this is detrimental, as you can imagine. So I understand we're going to be collecting all this data. When are we actually going to start taking action?
Yeah, we're ready to take action. As complaints come in, we're addressing them, as I mentioned. I mean, unfortunately, so far of the 80, there's been a couple dozen that were applicable and that we were able to work with them on. But again, many of those were GLP-1 complaints. But to be able to kind of really build that out, we're looking to, and this is part of why we've got this ongoing conversation going with the independent pharmacies, is we need their experiences. We need them to come to us to talk to us about kind of the issues that we're running into, because then we can have that direct line into the PBMs to require corrective behavior.
Can you tell me what specific criteria your department applies when reviewing specialty drug challenges, and how does it ensure consistency?
Yeah, we actually haven't had one yet. So that's part of they can come into us today, but we plan to also make it easier through that form that I mentioned. But as we look at it, we have a contract PBM firm. So we look at what companies suggest should be specialty drugs in addition to what's on the Medicaid list. We push back based on what our pharmacists tell us, give them an opportunity to respond. In many cases, the company agrees with us that it should not be a specialty drug, so it does not go on the list. Sometimes it would go on the list. But now as pharmacies, if a pharmacy is negatively impacted because a drug that they think that they could dispense is on the specialty list that they're not allowed to dispense under PBM policy, that's something that we want to hear about, because that's something we'll have direct access to. Sorry, Chairman.
I would just appreciate open dialogue with Hometown Pharmacy as we continue to try to deal with some of these ongoing issues.
Absolutely.
Thank you.
Thank the gentlelady, Representative Curry.
Thank you, Chairman. Hello, Commissioner Humphreys. Thank you for being here today, and I just want to thank you for your continued support of the PA Black Maternal Health Caucus and all things maternal health. Thank you for being at our events and really shining a light on many of the issues around insurance when it comes to maternal care. So with that being said, I want to ask you about the maternal health provider networks. Pennsylvania continues to experience a maternal health crisis, as we all know. Unfortunately, hospitals continue to close these services, which leave many of our communities without necessary access, which we call maternal health deserts. This often means that individuals need to go long distances to access this critical care. I have worked on several pieces of legislation that would address these access barriers, including ways that midwives can work fully within the scope of their licensure. So I have a few questions. I understand that the Department of Insurance monitors the provider networks of certain health insurance companies. How do you ensure that providers like midwives are appropriately included in these networks? What are your thoughts on encouraging the insurers to include providers like midwives in their networks so that individuals have the access to care they need? And when insurers are not appropriately paying claims for services providers like these provide, what do you recommend these individuals do to address this? And before you answer, I just, want to make it known that one of the oldest birthing midwifery centers in Delaware County, Montgomery County, they're right there on the border, is closing their doors next month. They deliver 600 babies a year, and they're closing their doors. So, thank you.
Yeah, that's a significant challenge, and I think one that collectively we're working with DHS and others in the health hub, the quote-unquote health hub, on kind of rolling out a maternal health strategy. And I know you've been a part of some of those conversations as well. Look forward to continuing those conversations and looking at more of what we can do. In some cases, it could be encouraging coverage, like with zuranolone. It was us going out on behalf of the governor's office and saying, look, we need more robust coverage. And the companies responded. So I think sometimes it's just an additional conversation. It's something that we could start looking specifically at midwifery as part of our past template. I don't know that it was on for this year, so while I was able to easily pull out the statistics on human breast milk, doulas, surrogacy, I don't know that I have that off the top at my fingertips on midwifery, but it's something that we can add as part of this process going forward. So not only will it be something that we could report out to you all and to affected constituencies on coverage, but one that insurance companies would know to look at, like they're looking at these other issues that we identify throughout the filing process more closely in terms of how they can potentially expand opportunities within their existing networks even. And I would say when someone has a complaint about kind of their reimbursement, I think a strategy to come forward to the department would be potentially in conjunction with the individual that delivered the birth or whoever is the primary recipient of the payment, whether it's the hospital, the OB, or in some cases the birthing center or others. Work with them, bring the complaint to us, and we're happy to engage the insurance companies to develop kind of how this process worked. Because I think in many cases, and I know I think the AMA has a webinar coming up on maternity and birthing bundles. It might be as upcoming as next week or the week after that, and changes that they're making to bundling codes. But it may be something that you could look at as part of that bundle, because sometimes the bundle would go to the quote-unquote quarterback today, and it's that individual's responsibility to pay the other individuals or participants or facilities subject to the terms of the contract that they have with those different groups and individuals. So it's something that potentially could be built into maternity bundles in the future.
Thank you so much, Commissioner. You always have good suggestions and recommendations. I just want to remind everybody that 93 to 98% of all maternal deaths are preventable. Thank you, Commissioner, and to your team. Thank you, Chairman.
Thank the gentlelady, Representative Mako.
Thank you, Mr. Chairman and Mr. Commissioner, for being here. Actually, this is serendipitous. I have a similar question, I guess. My question has to do with streamlining provider credentials and what the department's doing to do that, especially when it comes to trying to get treatment for patients, really in our rural communities. I guess it's a problem in the city of the first class, but in other counties as well, you have to drive hours to get health care, and trying to make it easier to get access. What's the department doing to help credential some of these insurers on the commercial level?
Yeah, we've heard, I think, loud and clear challenges in the credentialing space, particularly in the rural independent spaces, because I think the vast majority of our providers use CAQH for credentialing already today. Every insurer, I think, that operates in Pennsylvania also uses CAQH for credentialing purposes. It's really part two when it comes to the verification of data that comes in through the credentialing that I think has been the most significant sticking point. So we've actually, going back a year, in Secretary Arkush and I really focused on credentialing is what seems like an addressable issue.
Right.
So we started the conversations, and now Dave and my team, and I know the Secretary's team has been able to participate. We're meeting almost monthly, I think, with all stakeholders. So it's your hospital stakeholders, it's the insurance companies, to come up with a single set of data. Really, this focuses on the provider directory piece, but that's intricately linked to the credentialing process. So we're trying to come up with that uniform set of data that can really make these processes better for everyone. And right now, we have a lot of buy-in. So I think we hear from interested stakeholders when there's legislation, it's hold off because the department's having really productive conversations with the payer and the provider side. We are, and there's a call tomorrow. It's 3 hours, I think, is what they generally meet with when they're meeting on these monthly basis. And once we get that narrow data set, I think credentialing becomes the next step on making this easier for everyone and eliminating those pain points for the providers today. And right now, I'm cautiously optimistic that we're making good progress.
Do you have like a guesstimated timeline on how long that what you guys are looking at for this turnaround on this info?
I would.
Definite maybe.
A definite maybe is, I think tomorrow's call, ironically, is where we turn the corner to how the provider data links into the credentialing conversation. So tomorrow's conversation, I think, will really inform what the next steps look like and how readily accessible tackling the credentialing issue is.
And then there's nothing on our part as far as legislation that you would need to move further with this?
There may be, but right now the process, I think, is working, and to the extent that they all agree on the same uniform set of data that both will inform the directory and credentialing, I think we would have preempted the need for the legislation. So we're working at it both from a delegated credentialing and a non-delegated credentialing perspective. So would encourage those of your maybe constituents that have been impacted by this on the provider side, engage their associations or come directly to us to participate in these conversations. And in the meantime, we've handled a number of these issues on a one-off basis. So if a particular provider is having a hard time getting into a network, we're glad to work with them and the insurance company to see, why they're not in yet, and kind of how we can maybe get them in network.
Okay. Yeah, so just what I'm hearing is you guys are working on it. It's a process. Don't know the timeline, but you got a call tomorrow that you'll, I guess, hopefully work through some of these issues to get a better product in the near future?
Yeah, much more succinct than me. Yes, sir.
We speak for a living, I guess. No, I'm just kidding. Take care. Thank you, Mr. Commissioner and Mr. Chairman.
Thank the gentleman. Representative Bellman.
Thank you, Chair, and thank you all for being here today. So I'm getting a lot of feedback from constituents that they are trying to do everything that they can to save money, and they're cutting back on going out. They're cutting back on traveling. But one thing that they also bring up a lot is auto insurance. And I know that inflation has had a significant impact on the affordability of insurance policies, including policies like personal auto insurance. Last year, I saw that the Pennsylvania Insurance Department saved consumers $91 million on personal auto insurance premium increases and $227 million in property and casualty insurance increases in total. So other than inflation, what are some other reasons that are contributing to the continued increases for auto insurance?
Yeah, Representative, it largely is inflation. The U.S. Department of Labor said that maintenance and repair costs have increased 34% between 2021 and 2024. The rates that we've approved in 2022 would have been around 14% high. In 23, 13%, still high. 24, 8%. That's getting closer to where I'd like to see it. Last year, negative for the first time. So we've been in a position where I think we've reached kind of the equilibrium that our insurance costs, because we're really trying not to give insurers any more rate than they absolutely need to keep costs, keep in pace with the costs of the products or services that they're insuring. So my team has been really, really pushing, and we're proud to announce that towards the end of last year, we finally we approved and got some rate decreases. State Farm had a decrease of over 9%, impacting 1.5 million Pennsylvanians. Travelers had a 4% decrease, impacting another 160,000. I expect other companies will be coming in with rates that are flatter or potentially even in negative territory. And consumers should finally be able to see this. So last year, they were still feeling the 8% or the 13% that had been approved over the prior 2 years. Now that we're finally at that flattened stage, your next increase potentially could be much flatter than what we've seen in the last couple of years. So we are continuing to push that message.
And do you think there's anything that legislators can do to help this problem?
I actually think we have a very competitive auto market. If you look at our neighboring states, we're lower average premium than New York, New Jersey, Maryland, Delaware. So I think we're where we want to be, but we need to continue to keep the pressure on. And then I think it becomes how insurers are treating their policyholders and making sure that consumers are getting all the information that we feel like they need. And when they're having claims or when they're getting these increases, knowing that they have a place to go at the department. So when they come through you, Representative, bring them over to us. We're glad to talk them through, because they also have potentially several hundred options to choose from. Not only do we have a more competitive market from an average rate perspective, but we have more insurers operating in Pennsylvania than a lot of our neighboring states. Even some of the largest states in the country would like to see the number of property and casualty insurers that we have here. So there is competition. If you're not happy with what your rate looks like, we'd encourage you to shop and to potentially, because I think one area that's a challenge in Pennsylvania is that you can be canceled within the first 60 days for any reason. So when we say shop for coverage, we also encourage people to keep their policy for 2 months should something happen, and then they can retro cancel when they've been clean for 2 months and moved on to the policy that they're more happy with.
All right, thank you, and thank you, Chair.
Thank the gentleman. Representative Marcel.
Thank you, Mr. Chairman, and thank you very much for being here today. I had 2 questions that I wanted to talk about. One relates to providing consumer assistance in terms of people contacting your agency, much like when they contact our offices and they're looking for assistance, they have questions for you, they might have concerns about their insurance. So I was wondering, do you know approximately how many consumer interactions your department has each year? And if you could provide information about what are the most frequent things that consumers might be reaching out to your office?
Yeah, I have all of that. We had, I think, 15,000-ish. Let's see, we have it right here. So we had 14,000 complaints last year, and I think that's pretty balanced across auto and health insurance are our most frequent complaints. I think often that is rates and how much they're increasing. On the health insurance side, it can be kind of denial of care or the prior auth process, maybe accessible providers that maybe are too far or the wait time is too long. But we've kind of steadily been in that mid-teens thousands of complaints on a yearly basis.
So it hasn't necessarily gone up or down, that you've been consistently around that range.
It actually, yeah, it's been, I mean, it was just shy of 14,000 in 23. It was 15 and a half last year. So we actually, I mean, I think I'll be one of the few cabinet members to tell you, like, we would like more complaints. It helps inform our processes when they come in so we can understand what's happening on the ground. So Dave's team, we have sophisticated ways of measuring our market, right? Every company is required to submit a market conduct annual statement, and through a series of kind of statistical analyses, we can identify outliers within our market today, and we subject any outliers to kind of enhanced review. We may send them a list of interrogatories. We expect you to answer A, B, and C. Why are you so far outside the norm in terms of claims closed without payment within 90 days, for instance, is one of the categories. So we have a lot of data that we can build on in that process. But like the day-to-day consumer complaints, this is how we learn. Whether it's coming through the department, coming through your offices with concerns about AI, or I think that the first time we found out about the aerial imagery being used to non-renew or cancel was a consumer that sent us pictures from their insurance company from really frickin' high up that it's hard to tell the difference between a house and a tree, and yet the insurer is saying your roof is bad. I mean, Dave looks at the pictures, we go back to the company and say, which roof are we talking about? Because this is a row home. There's 4 different roofs you're looking at, and they don't necessarily know. So, I mean, I think just the back and forth that we can have with your offices as consumers come in, we're glad to engage any complaints. And we'd like to come into your area.
Yeah, and that's great to know. And I'm sure that a lot of our offices, you might be getting more calls from us now after what you just said. And so we appreciate your work there. I had one more question before my time is up. Last year, the fiscal code included a provision that reorganized the Joint Underwriting Association. I was wondering if you could provide an update on how that transition is going and when the board might be meeting to talk about that.
Yeah, the board is still being structured. So the governor's made his appointments. I think we have another Representative Topper, I think, made his appointment. So there are 3 still pending that we need appointments to be made. But the board will commence, I would think, probably in the first quarter, assuming we continue to get these appointments coming. But now that we have a majority, I think they could go ahead and meet there. Obviously, you know they're not under PID. It's a separate independent agency or independent entity. So as those continue to come in, this year will actually start the quarterly reporting from JUA to our department on kind of claims information.
And so did you say Q1?
Q1 will be the first report we get.
Okay, thank you very much.
Yeah.
Thank you.
Thank the gentlelady, Representative DeVanzo.
Thank you, Chairman Harris and Commissioner Humphreys and staff here. The department is a self-funded agency that returns excess dollars every fiscal year from the Insurance Regulation of Oversight Fund, the IROF. Can you explain how this process works?
You want to take it?
Sure. What happens is at the end of each budget year, the amount of cash that we have on hand is reduced by whatever is in excess of what our appropriated budget was for the prior year. We return to the general fund. So, for example, in July of 2025, for the prior fiscal year, we returned just over $24 million to the general fund.
Okay, and the reason I ask is, as you just stated in 24-25, 23.7, However, there's no dollar amount anticipated for 25, 26. Can you just give us a reason why?
Yes, I can. Currently, the next 3 months are when 80% of our revenue comes in for PID. And it was decided between us and GBO that we wouldn't guesstimate a number because most of our revenue comes in after the governor's executive budget book is put to press.
Okay, perfect. Thank you.
Thank the gentleman. Representative, Chairman Struzzi.
Yes, thank you, Chairman. Once again, I appreciate you all being here today. I know it's getting late. Just a question, though. You both mentioned, it's hard for people to afford insurance right now. And so I think that behooves us then to look at ways to reduce those costs, if possible. So I want to take a little step back. Association healthcare plans. Those were a big thing. I'm going back to my chamber days. For small businesses to be able to afford health insurance. And they essentially, if I'm correct, went away here in Pennsylvania after the passage of the Affordable Care Act. So what are your thoughts on bringing those back into an option for people here in Pennsylvania, for small businesses?
Yeah, we actually still, there are still association health plans in Pennsylvania. And I think one of the issues when we talk about AHPs, and it's one that we had discussed with insurance committee staff several years ago, there's two challenges in how it's been kind of brought forward legislatively. I think the first is a letter that CMS sent to the Virginia Department of Insurance. In it, because the legislature passed legislation to try to authorize broad-based AHPs that would be treated as one large group. CMS said, no, you can't do that. You have to look through to the size of the employer to determine how to rate that association. So if my association had a sole proprietor in it, a small group, and a large group in it, each of those different employers would have to be rated based on the rating rules that apply to that particular market segment. So if we were able to get over that hurdle, and CMS may be more interested today in looking at how that would work versus kind of when they sent this letter. I think that the second piece that we ran into when this body was discussing this legislation a couple years ago is we fundamentally do not think that you should discriminate rate based on two different employers in the same association. So the proposals that continued to come forward would have let Devon's employees pay 3 to 5 times less than my employees because maybe hers were healthier and one of my employees had cancer. So it would essentially set up this situation where I'm ultimately priced out of the market to the benefit of Devon's employees and others, but what does that do to the small group outside of the association plan? It means that everyone that would stay in the small group market would be the bad risk that couldn't find an association to join and was priced out. So if we were looking at an association plan that was broader, that would still provide the EHB that was in underlying legislation, that wouldn't discriminate. So it would be like the type of plan that a lot of us pick from, right? It's employee, employee plus spouse independence. Regardless of the employer, I think that's a fairer conversation than some of the discriminatory rating practices that were in earlier conversations.
So it is something we could have a discussion about and possibly implement to help reduce some of these costs.
I think
if we make those changes that you're suggesting.
We could have additional conversations about what appropriate AHP legislation could look like.
Okay, all right, thank you.
Yep.
Commissioner, I have a few questions for you and the team here. Could you tell me how many people were enrolled in PENNIE in 2025?
Sure. So we had a record number of enrollees at 497,000.
And how many people are enrolled in PENNIE 2026? Do we have, and do we know why? Because Because I know we talked about a drop. What is that number currently, and do we know why these individuals have chosen not to enroll?
Sure. So currently, as of today, the number is about 471,000, and that covers up a bit the number of people who dropped, which is currently at 104,000. We did have some new enrollees come in during open enrollment that offset some of the dropping we saw. But what we do know is that over 100,000 people have dropped coverage, and so our concerns that we had around the cost increases driving people out of coverage and what that meant for the uninsured rate still exists, because there are still many more uninsured today than there were in 2025. And a lot of that is what we hear from people who say the costs just aren't possible. They are feeling squeezed by spreading their costs across a lot of different places. We have even people who are enrolled, more than 50% said that it doesn't fit within their budget, and they had to move other household essential items in order to make room for health coverage. What we hear from a lot of people is that who did stay is that they have to make those changes because having coverage is literally life or death for them. It's cancer treatments, it's medications to keep their seizure disorder managed, it's small business owners who feel like, especially farmers we hear from, who have physical risk to their job and they feel like they need to have insurance in order to stay healthy enough to do their job, but are really concerned about the cost increases. So we've seen a tremendous number of people, that's 4 times higher than the number of people who dropped coverage last year. It's all consistently, the feedback we get is it's driven by costs. And even the people who stayed are feeling extremely stretched, and many of them picked plans with deductibles that are thousands of dollars more. So they are still stretched even when they stayed covered.
And the increase in cost is directly tied to the lack of subsidies provided by the federal government?
Yes, that's correct. There were additional premium tax credits that lower the cost of coverage available since 2021. The availability of those made coverage more affordable than ever. We saw enrollment increase by 50% in rural areas, in urban areas, young adults, retirees, amongst farmers, small business owners, across all those different aspects. And those extra tax credits expired at the end of 2025, so that caused costs to go up by 102%. Some people lost tax credits altogether, and we're looking at paying up to 50% of their income just for the premium, even before the deductibles kicked in.
So you said some folks have seen a 102% increase because of the inaction in D.C.?
Yep, on average, costs went up by 102% because Congress did not extend the enhanced premium tax credits.
So I think we know. So when uninsured people get sick, we know they're going to get sick. Everybody gets sick at some point in time. Would you agree that even though they don't have health care, they still seek coverage? They still seek to be seen with regards to whatever their sickness is?
Yes, and I think we know that to be true because we used to see higher uncompensated care costs. Since coverage has been expanded, those costs have gone down, but as the uninsured rate increases, we could expect to see those go back up.
And where do those uninsured folks typically seek coverage?
What we know is that many uninsured wait until their conditions get significant, and so they go to the emergency rooms. And that has an impact on everybody because it makes emergency rooms essentially primary care and creates longer waits there and resource issues there. And it also creates strain on hospitals.
So uninsured person. So let's go back. A lot of folks have fallen off of health care because the subsidies weren't extended at the federal level, correct?
Correct.
Okay. We know that those folks still get sick, and it's your testimony that they typically wait until they get sicker before they seek treatment, right?
Correct.
And that treatment is typically in the emergency room, correct?
Correct.
Now, Commissioner, let me ask you this. When those folks show up at the emergency room and they are treated, who pays for that?
That's potentially a little bit of a couple different buckets. It could be uncompensated care that impacts all of us, and some of it becomes medical debt that individuals have a hard time getting out from under.
So, medical debt that is borne by all of us, and then the hospitals assume a lot of that cost as well. How does this affect small health systems or small hospitals and those hospitals in rural Pennsylvania?
So that is one of the highest concerns, given that a lot of what the people who have dropped coverage are more likely to live in rural counties. And so in talking with the Hospital Association of Pennsylvania, they have identified the terminations of coverage through PENNIE because of the cost increases as a contributing factor to their concern around the viability of hospitals, especially rural hospitals in Pennsylvania.
Just to add to that, Chairman, they rely on the commercial market and the reimbursement rates that they get from commercial insurers that overpay Medicare, for example, to be able to make ends meet. So when they lose revenue from kind of these higher paying insurers versus some of the other programs, it puts them in a much harder position, even while they give uncompensated care.
And when you say them, you're talking about hospitals?
Yes, the providers.
Is there a likelihood that because of the uninsured population still seeking treatment, but hospitals not getting reimbursed, that some of those hospitals could close?
I think it's something that HAP cited as a significant financial strain, particularly among rural hospitals.
So particularly amongst rural hospitals, it is very possible that many of those hospitals in rural Pennsylvania will close because of the folks who continue to come and get service, but they're not getting reimbursed for those services. Is that a thought?
They will certainly be negatively impacted from a financial perspective by higher uninsured rates.
And so when that hospital closes, or when that emergency room is overburdened in rural Pennsylvania, or even in urban Pennsylvania, even in the urban areas, does that affect even those who may have commercial insurance?
Yeah, it impacts, I think, all of us in a number of different ways. And in Representative Fleming's question, we addressed a little bit earlier. We all pay more in insurance rates on the commercial side when fewer people are insured, because the makeup of the risk pool that we're insuring is generally less healthy than when we have higher insured rates.
Wait, you got to talk to me like I'm a second grader with that one. Make that make sense, like I was in second grade.
When there are more uninsured, the risk pool is worse, so insurers charge the rest of us more than what we would have otherwise paid when we had more people insured.
So then that means that because the federal government did not extend the tax credits for health care, and because of that we now have more uninsured people, that even those with commercial insurance are still going to have to pick up the tab for those who are uninsured? Is that what we're saying?
Yes, in addition to the statistics that Devin had on impacts to the overall Pennsylvania economy.
Yeah, and I'll add,
go ahead.
I can add two other pieces. I think what we've heard from consumers in addition is that some have said that if they lose coverage and they're not able to manage their conditions, then they are very likely to become permanently disabled. And they have asked the question, I'm not able to work if I'm not able to manage my condition. So we've had several consumers raise to us, where's the logic here? And that then I'll become more of a drain on, other government programs that I am currently, working and being productive, and I don't want to be there, but without affordable coverage, that could happen. And then one other thing that we hear a lot from consumers is not that they're going to go to the emergency room when they get sick, but that, in their words, I guess I'll just die, is what we've heard from several consumers. Because they've said, I don't want to burden my family with the medical debt that would come from going to the emergency room when I get sick, and so I'm just not going to go. So we've heard those types of things from consumers facing these higher costs as well.
All right, so just to wrap this up, and I want to make sure I got it all. You're saying that there are more uninsured people here in Pennsylvania because of the lack of continuation of the subsidies that we see coming from Washington, D.C., correct?
Yes, Congress failed insured Pennsylvanians and all Pennsylvanians.
Because those people are uninsured, but they still get sick, they're going to more than likely end up in an emergency room worse off than they would have been if they saw their primary care doctor, correct?
Yes.
So those uninsured people who now go to the hospital and overburden our emergency rooms, those hospitals are still required to service them, even though those hospitals won't get reimbursed, correct?
Yes.
That puts a financial strain on those hospitals, primarily hospitals in rural Pennsylvania, correct?
Yes.
Does that mean that, and it's your opinion that those hospitals could possibly close and create healthcare deserts in many of those places in Pennsylvania, correct?
They are far worse off today than they were last year at this time because of that.
And when those folks are uninsured, seek treatment, go to the emergency room, all of us, even those in the commercial space, end up paying more for health care because insurance companies raise the rates to compensate for the people who are uninsured. Is that correct?
That's right.
Thank you, Commissioner. It would seem as though it would make sense to insure more people and not kick people off of health care, because when we do that, we overburden our emergency rooms. Many of our hospitals, particularly in rural Pennsylvania, could close. And at the end of the day, all of Pennsylvania actually ends up paying more, correct?
Yes.
Thank you so much. We appreciate the Department of Insurance and Pennie for being here with us this afternoon. And that will conclude our budget hearing today with the Department of Insurance and with Pennie. We will be here tomorrow at 10 a.m. with PEMA. We will start, where is that at? Where we at? Oh yeah, we'll start with PEMA and the Office of the Fire Commissioner here at 10 a.m. Thanks everybody, and with that, this day of budget hearings is now concluded.